Great news for stock market investors as the US and China agreed to halt the hostilities between the countries in increasing trade barriers. I'm going to talk about the details of this announcement and what it could mean for stock market investors overall, and highlight a few stocks especially that will benefit from this agreement.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Beijing is again buying U.S. soybeans after it had abruptly cut off American farmers, and after months of posturing, arguing, and threatening, U.S. President Donald Trump and Chinese leader Xi Jinping have essentially turned back the clock. While the meeting between the two leaders was hailed by Trump as a roaring success, the agreement that came out of it may only serve to undo some of the damages Trump inflicted with his trade war upon his return to the White House. And we are still increasing trade barriers against imports from China. The effective tariff rate will still be roughly 50%. But the good news is the threats. Remember, President Donald Trump was threatening to increase tariffs to over 100% effective November 1st. At least that threat will be off the table, and 47% is much more manageable than over 100%. Also, China agreed to push back some of the trade barriers on rare earth elements and agreed to purchase U.S. soybeans. So this news is especially good news for companies like Amazon, Walmart, and Target. A large percentage of the products that these companies sell in the United States are imported from China, and the reduction in tariff rates and the reduction of threats on increasing tariff rates is good news for these three retailers. Now, this is more good news for Target than Walmart and Amazon because Target doesn't have international operations where it can sell its products that it sources from China into other countries. Target only makes sales inside the United States, and so it's especially important on a percentage basis for Target compared to Amazon and Walmart, which have sales outside of the United States. So theoretically, the products that they source from China, they can sell to customers in Mexico, in Canada, in Europe, in other parts of the world, not subject to these increasing tariffs. Still, customers in the United States and businesses in the United States are subject to increasing tariffs when importing products from China compared to last year when they were not subject to these tariffs. So conducting business is more difficult for these businesses. Walmart already has informed the investor community and informed customers that they will see higher prices as a result of these increasing tariffs. And so consumers will pay these higher prices. Some of that will be paid by consumers. Some of that will be paid by U.S. businesses. Overall, prices will increase in the United States. Now, whether or not that's good news for the U.S. in the longer term remains to be seen. What we're seeing from these trade barriers and the negotiating power that China is boasting with regards to rare earth elements and purchases of U.S. soybeans indicates that China does hold strong negotiating power, and the U.S. business and U.S. consumers are increasingly reliant on sourcing products from China, which is evidence of the reason why the current administration wants to place increasing trade barriers, because they are uncomfortable with just how much U.S. businesses are outsourcing products, outsourcing manufacturing outside of the United States. So they want to bring some manufacturing back to the United States, and that will take time. Overall, over these next few years, as these trade barriers take effect, the cost of production will increase for nearly every business in the United States that's producing physical products. Anytime you're producing physical products, you're importing at least some percentage of the components from outside of the United States. And if you're paying a tariff for importing those products, your business is facing higher cost. As a business, then you have to make a decision. Can you absorb those higher costs completely and keep the consumer paying the same price? Or will you need to raise prices that consumers pay? Most businesses that I'm seeing are raising prices because they don't have enough profit margin to absorb all of the higher cost, and so they're raising the prices that consumers have to pay. Now, the current administration is saying that this is a reasonable price to pay for US consumers to lessen the dependence on outside countries for the products that we're buying. That remains to be seen whether or not it is indeed worthwhile for bringing some manufacturing back to the United States and lessening our dependence on these countries where we're increasing tariffs. Now, one thing is likely is that when you're trading more with other countries, that decreases the likelihood of other kinds of conflicts rising. And so, with the decrease in trade, and the increase in trade barriers, it increases the risks of other kinds of conflict, which is my main concern. I would hate to see an increase in conflict as a result of an increase in trade barriers. But that's a longer term issue, a lot of volatility, and that's not where my expertise lies, so I won't dive too deeply into those matters. All I know is that US businesses are facing higher costs, and they are likely to pass along a lot of those higher costs onto US consumers. And on a proportional basis, lower income consumers are feeling the brunt of these impacts more so than higher income consumers. And so these developments, at least the thawing of these trade barriers against China, is good news for stock market investors and good news for US consumers who will face the brunt of these impacts. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.